This is the credit policy preview right here on ET Now. Remember, the Monetary Policy Committee has been meeting today and will continue to meet tomorrow. In fact, it will unveil the credit policy decision. And an ET Now poll of economists indicates a status quo policy outcome. While no one is expecting a rate cut at this stage, is there perhaps room for some more ease as far as the commentary is concerned? A little more dovish stance there. And who better than four extremely wise people to discuss and debate all of that? We've got Jahangir Aziz, Head of EM Asia Economics Research at JP Morgan. I've got Arvind Virmani, President Forum for Strategic Initiatives, and again, also a former Chief Economic Advisor in the Government of India, KC Chakravarti, former Deputy Governor of the RBI, and Maithili Busnoormat, our consulting editor and a very eminent economist in her own right. Thank you very much, each one of you, for being with us. I think before I kickstart things, it's very important to set the context at this point in time. It's been less than a week that the GDP numbers are out and the picture isn't looking rosy at all. No matter what the government will tell you and however unfazed they may be, growth has not picked up. In fact, demonetization has accentuated that pain. So we need to talk about the growth and the inflation dynamics before we discuss policy any more in detail. And Jahangir Aziz, if I may throw this to you. Fiscal year 17 growth has come in at 7.1%. The fourth quarter clocked in growth of just a little over 6%, that's 6.1 to be precise. Of course, demonetization has had a very important impact. The government remains unfazed, denies it altogether. How long do you expect the pain to last?
Right. So let me say that, we are probably halfway between, completely denying that this is there has no impact of demonetization, or saying, this is completely because of demonetization. So it isn't really the 6.1% growth print in the fourth quarter that is troubling people. It is the fact that if you strip away agriculture and you strip away government services, i.e. the impact of government spending, and you look at what non-agriculture government GDP is, i.e. a measure of private sector GDP, which is where you would expect the impact of demonetization to be. This particular private sector GDP growth over 2015 and 16 was about 9.8% per quarter. In the quarter ending March 2016, it was as high as 10.7%. And that number in March of 2016, which is the number we are talking about, was 3.8%. And because of this slowdown, so there are two parts to the slowdown. A, the slowdown did not happen just in the quarter ending March 16. There was some slowdown over there, but the slowdown actually had started about a year back. So the move from 10.7 to 3.8 was steady throughout the 4 quarters. So yes, demonetization can be blamed for some of the slowdown in the fourth quarter, but as far as the CSO numbers are concerned, the slowdown did actually start in the first quarter of last year and has been going on since then. So I would say that we would, from our point of view, we would split the difference between, is it completely demonetization, or is it or demonetization has no impact at all?
Okay, Dr. Arvind Virmani, if I may throw this to you, is this completely demonetization, or is this perhaps on account of growth slowing down? In any case, in the second half of last year, demonetization perhaps just accentuated it. But the silver lining that a lot of people are reading into that growth data is that A, it matches reality more on the ground, and B, the demo impact, if at all it was there, is going to wane off. Is that how you're going to read it as well?
So, at a general level, clearly there can't be a disagreement, so it has to be judgment. So what's the general level? There's a trend and there is a shock, right? The shock is what we call demonetization. Now, it was very clear, I don't want to keep repeating this, but I'm not saying this in hindsight. I said at the time of demonetization that the shock would last for a month or two, a quarter or two, depending on how quickly the remonetization takes place, and that has been the story. So on the other hand, it's very hard to know from 4 quarters of data what is the trend. Now, one way to look at it is what Jahangir has said, just looking at the trend in the last 3, 4, 5 quarters. Another way is to take the average growth over the last several years, let's say from 2011-12, when the new data series starts. It's been fluctuating between 7.1 and 7.5%. So if you take that as a kind of base, then I would still go with the fact that in the last quarter, the lowest quarter, the 6.1, there has been an impact of around 1% points in that quarter, not for the whole year as a whole. So that would be my kind of bottom line. The trend part, a little difficult, because I again disagree a little with this tendency to separate out, because we know for the previous 2 years, the 2 consecutive droughts have a devastating effect. It works through the economy, and to me it's not a surprise that it would affect other sectors of the economy. The surprise may be that it took more than 6 months to a year to have its full impact. You know, one would think, and that is because for 2 reasons. One is the agricultural year is not the same as the financial year. We normally think of agricultural year as June to July, and if you think of it, the previous drought ending at July, the impact you will really see in September onwards. So I agree with the broad approach to analyzing it, but not with the details of what Jahangir said.
Okay, Dr. K.C. Chakravarti, you've been in the thick of policy making at RBI at a time like this, when we have perhaps achieved, in fact overachieved on our targets on inflation, and growth continues to stutter, stammer, whatever you may call it, continues to be weak. How should the Monetary Policy Committee be reading the growth inflation dynamic? Because, I mean, one of the things that people are saying about inflation is that GST will come in and also it will not have such an inflationary impact. Look at where the rates are. And the other part is monsoon, if it's good, will also rein in inflation. So how should the Monetary Policy Committee be reading the growth inflation dynamic at this stage?
You see, look, so far as monetary policy is concerned, to affect the growth rate through inflation, I don't think it is possible. Even if they cut the rate, I don't think anybody is going to get any benefit, because transmission effect is very, very low. And the way we have structured our transmission effect, that base rate do not undergo a change, PLR does not undergo a change, MCLR for existing borrowers does not undergo a change, it undergoes a change only after 1 year, only the new borrowers are going to get the benefit. So I think the Monetary Policy Committee have their own view on the inflation. They will be focusing more on the inflation. They will be seeing whether they are nearer to say 3.5% inflation on a sustainable basis or not. If that they are assured, then they may think something on the rate front. So I don't think they are looking much that because of cutting the rate something is going to happen. Inflation, they are more on the look into the long-term trend of the retail inflation. That's my view, and my own view is that even they cut the rate, I don't think the situation in the ground level is going to change. The full transmission has still not affected, and entire structural things, the structural reform is necessary in the banking system. Without that, I don't think through the bank credit or through the monetary policy, you will be able to stimulate the growth at this stage.
Okay, that's an important observation coming in from a former central banker, where he says that A, the monetary policy is not going to be obsessed with inflation now, but more long term, and B, even if they were to do anything on rates, it's not going to be transmitted. Maithili, I know you have a very strong view on this, and I'm going to ask you a direct question. When the monetary policy met today and when they meet tomorrow before, of course, the final decision, should they at all be looking at our graph, which has overachieved on inflation, but growth which continues to stutter? Or do you believe they will be, they will think that the impact of demonetization was transitory, that pain is going to pass off and growth will bounce back?
It's going to be very difficult to second guess what they're thinking, Supriya, but the fact is the moment we've shifted to an inflation targeting regime, it is inevitable that the MPC will put inflation first within its sights and then look at growth. So given that kind of outlook of the MPC, which, as I said, is the inevitable price that we have paid for shifting to the inflation targeting regime, the MPC is likely to look at inflation with greater concern, even though inflation has come down. So while they may not be worried about inflation, at best they would say, okay, let's take a slightly more dovish stance as far as the commentary is concerned, but at the moment there's no case to cut rates for a variety of reasons. we don't know which way the Fed will react. We don't know how temporary the monetary demonetization impact is going to be, and banks have already cut their lending rates quite dramatically. So for a variety of reasons, my sense is that the MPC will continue to look at inflation as the bigger concern and put growth secondary, and hence will opt for status quo.
So it will opt for status quo is the word coming in from our consulting editor Maithili Busnurmat there. But Jahangir, despite inflation targeting, and that's a question that I put forward both to Dr. Chakravarti and Maithili there, we've overachieved on growth targets. There are no immediate challenges to inflation really. I mean, global commodity cycle is low. It's not going to rise anytime soon. At least that's what the predictions are. Growth has been seriously hit. But the RBI continues to be extremely hawkish. Perhaps for the right or the wrong reasons. Their job and their mandate is inflation and price management. My question really is, what would you expect from the RBI as far as the rate or even the policy narrative or direction is concerned, the commentary?
So let's start again. You know, so with the lack of any other information, let me fall back on the CSO's growth numbers. Look, the high frequency indicators across the board had been showing a slowdown in the economy much longer than even the CSO numbers were showing. And, you know, at the end of the day, you know, we have questions about the growth numbers, questions about high frequency numbers, but really the proof of the pudding is in core inflation. That, you know, whichever way you cut it, once you strip food prices, once you strip energy prices, the core inflation number almost always reflects the actual state of slack in an economy. So if core inflation is falling, then almost always it is the case because there is a increasing slack in the economy, i.e. growth is not as high as, you know, one would like it to be. So if you look at core inflation behavior as a proof of the pudding, that has been going down steadily throughout the entire 2016. While we do expect it to sort of stabilize and perhaps even recover a little bit as the impact of the demonetization reverses, headline inflation will continue to roll off, not just because of the better monsoon, lower energy prices, all of those are true. And you could easily see inflation in the 2-handle sometime around August. And if that's the inflation path that could happen, then I really do not see how RBI can continue to believe that they need to keep rates, you know, where they are. Maybe they won't do it in this coming policy meeting. But by August, it would look very difficult. It would look very strange if the RBI did not ease.
All right, it will be very strange if the RBI does not act in August, Jahangir. But if I may ask you a very pointed question, you expect the action to come in August because that's also when you think inflation is going to trough. But what about June? What about tomorrow? Will the RBI do anything? Will this be status quo? Or at least can it tone down being more hawkish? Jahangir?
I mean, the way we are looking at it is that's basically the sequence. So in January, they changed their stance from accommodative to neutral. Our sense is that, look, you need to give them one more policy meeting before they first change their hawkish tone from accommodative to more accommodate, from neutral to towards you know, accommodative. And then perhaps that creates a space for them to actually deliver a cut in August. Now, can they cut in June? Yes. Will the June cut, you know, given the you know, dynamics of inflation, dynamics of growth, you know, where oil prices are, given what the Fed policy is going to be, is a June cut feasible? Absolutely. But just because, you know, they made this move from you know, having a very hawkish tone, having a very accommodative tone to a neutral tone back in January, we're just saying that just in terms of sequencing, they'll probably change their tone first and deliver a cut. But a cut before, but a simultaneous cut with a change in tone is perfectly consistent and reasonable.
Dr. Virmani, do you believe at some stage the RBI is trapped into what it did? So February, the stance was changed, like, you know, Jahangir Aziz was pointing out there, from accommodative to neutral. Then there has, of course, been status quo. Do you believe the RBI has kind of gotten trapped into what it did, and it's perhaps too soon for it to go back to being accommodative? I know there's a big clamor for it, both from the finance ministry and from Indian industry. But do you believe it's too early? Has it got trapped into its own making, so to say?
Yeah, I like your word trapped. I think that's exactly what it is. Because if you, I mean, we are not mentioning in deference to them their forecast. They forecast 4% for first half, 4.5% for next half, when myself and several others were saying it's going to be much less than that. And it clearly looks, you know, it's already well below that and is likely to remain there. So that's the problem. You know, I think, unfortunately, the modelers in the finance, I mean in the RBI, one of whom I do not want to mention the name, who actually worked with me, are two monetarists, hawkish old style, and the evidence of the last 5 years should be obvious to anybody. You know, every central bank has been over forecasting inflation, or at least the monetarists in the markets have been financing, have been over predicting, and the same has been true here. So at some point, you know, one can be wrong once, one can be wrong twice, thrice, 4 times. How many times can you be wrong? So as we've discussed before, you know, sadly I have to say that all my forecasts of inflation have been much better than the RBI, and they still do not listen. But anyway, that's their prerogative. So that's the first part. That, you know, the rates are too high. And I want to mention one thing here, and this is reflected. India is now the biggest play, you know, on short-term capital movements. The word is not coming to my mind, you know, that people, what do you call it? Japan used to be at one time. So the real rates are too high. And what happens in that situation is that international money comes freely into the country. Your debt as debt financing, and you're getting a lot of liquidity because of that. But it's the wrong sequence. What we need is to ease the monetary policy internally and let that have the effect. And there's enough evidence from inflation and GDP we've discussed to say that that is the correct policy. But you are quite right. I think they've trapped themselves. You know, at the time of the February monetary policy, I said I would have still supported a move to neutral if they had made one reduction at least, which they didn't do. I think that was their major mistake. It is very difficult for them to make an about turn at this point. And I think both you and Jahangir are probably right that they will soften their tone in this meeting, and so that they are able to do the actual changes in August. But there is one thing they can still do, you know, because there's been a lot of talk about transmission. That is one excuse which is still available to them.
I have transmission on my radar, and I'm going to talk to you about that in more detail. I will come back and discuss transmission, Dr. Virmani, with you in more detail. But I want to take this direct question to Dr. K.C. Chakrabarti as well. And you know, sir, the reason why I use the word trapped is not to say anything ill of the RBI, is because accommodative to neutral happened in February. You know, on the ground, you have an inflation reading of 2.99. The RBI must go back to being accommodative. It has to be more dovish. But can they track back so early is really the big question. And so are we going to see a substantial toning down of that commentary tomorrow? And or do you believe there can be a surprise and, you know, they can change their stance just yet? Dr. Chakrabarti.
You see, look, what they will do, whether they will tone it down or they will be hawkish, they will cut the rate. I am not much discussing about that. All what I am saying, even if they cut rate, nothing will change at the ground level. Because let us say, if we say inflation is 2.99, banks are paying 6% on saving bank deposits, 4% on saving bank deposits. Banks deposits are still 7%, 7.5%. You see, if you see the small saving, they are still giving the rate of 8%. Now, what we are talking of, there is that if you want that interest rate has to come down, interest rates on both the sides, deposit and advances has to come down. Banks are not reducing the rates on the deposits. How do we expect that interest rate on lending will come down? That's what I'm saying. Whatever people are saying, they have cut down the rate bank, they have cut down the rate MCLR, they have not cut down the base rate, they have not cut down the old PLR rate if some loans are given, and more than that, MCLR is applicable only after 1 year. So even if they cut the rate today, the existing borrowers will get the benefit only after 1 year. And if only new borrowers are going to get the benefit of reduced rate, existing borrowers become uncompetitive and they will become NPA. Now, if this is the situation, I don't see how you are going to have growth inflation dynamics because of the low inflation unless you make the structural reforms in the interest rate structure, transmission policy. That's the point I am trying to say, and this is happening for a long time. It is for the last 3-4 years this thing is happening.
Okay, that's a very valid point indeed. But Maithili, I'm going to take it forward to the next issue that is on the table, and that's the GST rollout. So a lot of people believe while the RBI is at the end of its rate easing cycle, the one thing that it is perhaps going to watch out for is the impact of GST. It was supposed to be inflationary, but look at rates and people believe it may not be so inflationary. So if there was at all going to be a rate cut, and I agree with Dr. Chakrabarti, unless that is not going to be transmitted, will not have an impact on the ground. But if there were to be a rate cut, it will perhaps fall only in August because they would want to wait and see how the rollout happens. Do you believe GST is the one big factor that the policy that at least policymakers are going to discuss today and tomorrow?
Supriya, before I come in on GST, I'd just like to disagree quite strongly with Dr. Chakrabarti when he says the transmission hasn't happened. Yes, transmission hasn't happened because from the RBI to the bank's lending rates, but because of demonetization and a huge surge of liquidity, lending rates in fact have fallen by much more than the RBI's repo rate. So rates have come down not because of RBI but because of demonetization. And it is also not correct that deposit rates have not come down. Deposit rates have also come down because there was a huge surge of deposits, and but for the fact that banks typically don't turn away deposits, they have been cutting interest rates on deposits quite dramatically. So it is not correct to say that deposit rates have not come down. They have come down and quite substantially. Lending rates have also come down because not again because of the RBI's policy signals but because of demonetization. So I would disagree with him on both of those. But having said that, let me just move on to your question about GST. The fact is, yes, GST rates do appear to be a little lower than what the weighted average would be today of tax rate, but the fact is that this GST is also expected to disrupt the economy. Now, in a country like India, where the demand-supply balance is always very precarious, any disruption to supply is possibly might increase prices. In such a situation, it is only fair that the Reserve Bank would like to wait and watch, because you cannot do a flip-flop on policy, which is precisely the same reason why they will not they'll find it very difficult to really go back to an accommodative stance per se. They might make the tone a little less hawkish and might be a little more dovish, but it would look very bad on the RBI's credibility, the MPC's credibility, if they were to do a reversal so abruptly within just about one monetary policy stance. So I do expect the RBI to be concerned about GST more because of the disruption that is likely to happen. In fact, I would say is almost certain to happen, or albeit very temporarily.
Okay. Jahangir, I'm going to ask you another question, and that has a lot to do with the MPC. I mean, Maithili just mentioned it in passing. The whole idea of having a monetary policy committee was to have diverse views, to have inflation hawks, growth warriors, all of them discuss and debate. But there's been a near unanimous opinion for the last 2-3 policies now. Will we finally see a more diverse view being expressed, at least in this policy?
So, you have to give these people time, right? I mean, this is a new experiment. There were all sorts of questions about what will this monetary policy committee do, etc. So you have to give them time. And if you actually see the manner in which, if you read the minutes of the Monetary Policy Committee and you see how their thoughts have evolved, you do see divergence of views coming out. It came out in the January meeting where people talked, where one particular MPC member even was talking about a preemptive hike. So you are seeing that view change. In the last policy meeting, there was a dissent to keeping rates on hold, and I will agree with you that not only the time has come, but this is not something that we can control. But increasingly, you will see divergent views emerging from the MPC, and that's an extremely healthy and extremely good sign.
I'm going to take quick last questions around the table, and please be brief, each one of you. Dr. Virmani, let me begin with you. Public capex is going to go up in the second half of this fiscal. Private domestic capex will perhaps also kick in. Consumption is going to rise, will take care of idle capacities, in turn crowd in private investment more. Exports are rising, FDI is coming in. Is Indian economy looking a little better, and will we turn a corner in the second half of this year?
Well, my forecast, which I stick with, was 7.5% for the whole year, but with a lot more uncertainty than I usually give in it, which is plus minus 0.75 is what I said, which I've never done before. In fact, I started with plus minus 1%, and I've reduced it somewhat because both of the domestic uncertainty, which we've kind of discussed, and about the global uncertainties, which we haven't, given in the US, etc. But given that, I think, yes, it's still possible to go back to that 7.5, 7.1, 7.5 range, which I mentioned earlier. We've averaged roughly since 2011, if I'm not mistaken. So yes, recovery is possible, but sadly what the demonetization and the hard stance on monetary policy have done is to delay the recovery of the corporate sector, in my view, and right, including the recovery of the corporate investment, which in a longer term productivity sense is very vital. So these are the two, right, in my view, joint negative effects of the demonetization and the central banks, in my view, wrong-headed, too excessively hard monetary policy.
Dr. Chakrabarti, is private expenditure or private domestic capital building being delayed because of the RBI policy stance, or does it continue to hinge upon things like excessive capacities, overutilizations? I'm just trying to understand from you very quickly.
You see, corporate health is very, very bad, financial health. I don't think unless you change the overall health of the corporate sector, in fact, there is no equity. I don't think it is going, from where the growth will come. Agriculture sector is in a very bad shape. Every state is demanding from the loan waiver. Now, are you able to give that? Now, if the agriculture is in the crisis, corporate sector is in crisis, how the retail will only and consumption will sustain the growth? I don't understand. We should be very lucky if we have 7% growth, but unless we change this particular structure by the structural reform and create conducive environment economy where the corporate will be encouraged to invest and they will have equity. I don't think corporates have any equity. So how will they invest?
Right. Maithili, very quickly, a last question to you, and you can have the last one on the show as well. Liquidity has been the one big guiding factor, especially after demonetization. That situation is beginning to change. I mean, call rates are beginning to go up. How much of a factor will that be in monetary policy decision tomorrow?
Well, we still have surplus liquidity, so I think that will be a factor. The key that RBI has to decide is how much of it is transient, how much of it is durable, and depending on that, they will take the decision. And as for your questions very quickly about whether the second half of the year is going to be better this year, we thought exactly the same thing last year around, and then we had demonetization. We really don't know what else the Prime Minister has up his sleeve. So we'll have to wait and see and just keep our fingers crossed that it is a better second half.
Engineered by policy makers, and that was demonetization, just when things we thought were beginning to look up. But on that note, we've all been talking about the RBI policy action. The wise men and women will tomorrow come out with their decision. Keep your date with ET Now, when Governor Urjit Patel decides on what the policy trajectory in India is going to be. Thank you very much, Dr. Arvind Virmani, Dr. K.C. Chakrabarti, Jahangir Aziz and Maithili Husnurman for joining us right here on ET Now.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.